We continue to see net migration edge up to record highs over the past year. Over 71,000 people inflows came into New Zealand. In terms of what's driving that, firstly, our more favourable labour market outlook, the fact that we've got better employment prospects, that's encouraging a lot of people to move to New Zealand, but also discouraging a lot of people from leaving to go on their OEs.
Sure.
We expect these features to remain, to keep net migration high over 2017.
And is that primarily because of the Australian labour market not picking up for a year?
A large part of that reflects what's going on in Australia, the fact we've got a lower unemployment rate, say, relative to Australia. Over the past year, we've seen around 1,500 net inflows from Australia. Now, that's in sharp contrast to the long-run average of a net outflow of 16,000.
Right, yeah. And so that's going to underpin domestic consumption, I assume. What do you guys think about the inflation outlook in New Zealand and the OCR track?
We've seen inflation turn. A large part of that reflects non-tradable inflation as capacity pressures in certain sectors such as construction are building up. That's helping to see an acceleration in costs in some areas. As economic activity continues to grow and we see capacity pressures broaden beyond the construction sector, we do expect that annual CPI will lift up close to the Reserve Bank's midpoint 2% target over the coming years. When it comes to what the Reserve Bank will do with the OCR, we expect that it will start to lift interest rates from the middle of next year.
But you also expect mortgage rates to start rising or keep rising before that, I take it?
We've already started to see mortgage rates lift in recent months, and that's despite the Reserve Bank keeping the OCR on hold. Now, a large part of that reflects banks passing on higher funding costs, but also over the longer term, we've seen that lift in interest rate expectations as markets become more confident that interest rates will start to rise over the coming years. This has helped to push up longer term interest rates.
So be prepared for higher mortgage rates in the next year or so as well.
We expect mortgage rates will continue to lift over the coming years.
The Reserve Bank Governor today has outlined some risks. He touched on the global economy, so Trump and Brexit, the French elections. How much of a risk is this to New Zealand?
When it comes to what's going on in the developed economies, we are seeing a pickup in terms of economic activity itself, but in terms of the risk with the shift towards protectionism, as we saw with we've seen with Brexit, with the election of Donald Trump, but also with the upcoming elections over in Europe, that shift towards protectionism is a key downside risk over the longer run for a small open economy such as New Zealand.
And another risk you've highlighted in your presentation, I think we've got the chart up here, is New Zealand household debt. And it just keeps on rising, household debt to disposable income, keeps on going up and up. Surely as interest rates start to rise, this is going to hurt us.
That's right. So household debt as a proportion of disposable income has risen to close to 167%. That's above levels that we saw prior to the global financial crisis. Now, this leaves the household sector more vulnerable to a change in circumstances which may threaten the serviceability of this debt. The key one being a lift in interest rates. As interest rates start to lift over the coming years, some households may find it difficult to service this increased debt.
And that could come as house prices moderate as well? Are you guys picking them to sort of stay where they are or fall away slightly?
We've seen house prices soften slightly in the wake of the macro-prudential measures taking effect late last year, which meant that property investors had to have high deposits when taking out new mortgages. We do expect that any further softening will be fairly modest, with continued population growth meaning that housing demand will outstrip new housing supply. We expect these factors will keep house prices high over the coming years.